So let's get started. So episode number 2, day 2 of the masterclass. This is going over psychology. What we're going to go over is business versus hobby, which is what I go over and talk about before everything else in the world of trading. How to collect data the right way to help and influence your psychology. How to backtest the right way to help and influence your psychology. And most importantly, how to fix those absolutely god-awful bad habits that you're probably dealing with when it comes to trading, because everyone has them. Everyone has them. Now, while you're sitting here listening to this, I just made a little announcement in the Discord. Please, if you have any questions at all, just drop them in the voice chat text box there, and I'll get to it at the end of this. So the first thing that I want to go over, and the thing that I always bring up on all of my social medias, is business versus hobby, right? I always ask people, if you were to start a business, right? In America, you got to create an LLC, an S corp, whatever type of business entity, right? You got to pay for the legal fees and the filings and all this stuff. You got to go through like a ton of work and processing fees just to become a legal business in America. So if you go through all of this work, are you just going to treat it like a hobby, or are you actually going to try to make money from whatever you've done, right? Like you've already put in this work, you're already invested. You're not going to just be like, well, I guess I'll put in a little bit of work today. I guess I'll find what my target audience is so that way I can sell this product to them, or whatever your business is. No, you're going to live and breathe that business, because you're now betting on the success of it, right? Some people take out second mortgages to have the starting capital to build a business, or they raise money for investors, or they do something that puts their neck out there a little bit so they have skin in the game, and they are going to grind like no other to try to make that business successful. Trading is no different than any of that. The problem is, the reason why it has such a high failure rate, the reason why so many people treat this like a hobby versus a business, you probably guessed it in the back of your head as you heard me talking about this, is because people treat this like a hobby because the barrier to entry is so low. Because people want to go and click buttons and see instant gains and all this sexy stuff because they see other people on social media do it, but they don't realize the work that it took for them to actually get that success, if that success is real, because then that's a whole nother topic of people just faking it all together. But people see that if you're looking at my screen right now, something as simple as just clicking this button and just pressing and getting into a trade, they think that it's that easy, right? And they associate that high failure rate to clicking that button. If you go and talk to somebody that doesn't know a clue about trading, if you tell your family member, your friend, somebody that has no idea, and you tell them that you trade, they're going to automatically look down on you, right? Most of the time. Most of the time, they're going to be like, oh, you trade? Oh, you trade, huh? You make money? Do you make, like, they all judge you. Why? Because the stigma is that most people fail in trading. And most people think that the failure comes from just clicking a button. They think that the act of trading is what makes them fail. And when you ask somebody, well, why is that statistic? Well, it's because trading failed. Okay, but why? What? Let's go down the rabbit hole. Why is trading causing so much failure? It's not this button. I can click this button a million times. That's easy. Okay, so if it's not clicking the button, is it finding support and resistance? If I go on NASDAQ right now, is it hard to objectively find an area of resistance and an area of support? No. Okay, well, maybe if we use data, right? Because this guy named Austin Clark, he always talks about data. Maybe data is the hard thing. Well, if I go to the hourly time frame and I use this little funny indicator that's free, it's going to give me data points that's going to tell me specifically where price goes every single day of the week. And he also has videos showing exactly where those rejection blocks are going to be taking place, so that way he can take the retracement of that trade every single day. Where you literally have to think barely, it's stupid objective that this is a liquidity footprint because there's impulsive wicks on a higher time frame. It's that easy. And then he's looking for rejections off of these footprints. Right? It's super mechanical. So that can't be it, right? If something is very stupid mechanical and you're using liquidity and data that we went over last on episode number 1. If we went over the basics, well, maybe market structure is hard. Well, he went over, there's only 3 ways that price moves. Price can literally only move higher highs, lower lows, or consolidates. And it's very easy to find these highs and lows, especially if you just put in a week's worth of work. You can find higher highs and higher lows and consolidation very easily. You can train your eyes in a day, 2, 3, 4 days of just training your eyes to see structure. That's easy. Okay, well, if that's not the problem, then what's the problem? The problem is the reason why the majority of America is overweight. The problem is the majority of the reason why there's such a high failure rate in anything people do. The problem is people can't stick to a single discipline over a long period of time. The problem is we're in 2024 and it's a TikTok age attention span. That's the problem. The problem is inside of your mind, in your brain, in between your ears. And so when I tell people that psychology is the most important part of trading and it's psychology is objectively more important than an edge, and people want to argue with that, people want to disagree with that, it's laughable because everyone will agree that what is going on in your mind is what is going to come out on those charts. And it's what's going to let that edge give you the profitability, or it's going to give you the failure because you can't stick to that edge over a long period of time. It's the psychology. It's what's inside of your mind. It's you treating this like a business or a hobby. It's you putting in countless hours of chart time to see and understand an asset and then read it and understand the unique patterns. It's putting in the backtesting hours. Instead of asking somebody online where their stop loss is, going and and being a 3-dimensional thinker and going and learning their content. It's going, instead of asking all these little simple questions of how to do something, go and find it for yourself. Go do the research, build it, understand it. Not taking a single trade of a live account until I know exactly my model in and out. I know I can be consistent. I know that my data tells me that this is the best day of the week. This is my strike rate. This is my profit factor. I know the business like the back of my hand. Versus acting on emotion, acting on impulses, acting on FOMO, taking feel-good trades, taking quick in and out trades because I have no data to back up any decision that I'm making on the chart. That is trading like a business versus a hobby. Ladies and gentlemen, the cheat code is literally out there in front of your face. There's no course that you have to buy. There's no person you have to pay to mentor you. The objective answers out there to be successful in trading are right in front of your face because you live it every single day. How do you become fit? You stay consistent to a routine and you eat healthy. You literally be in a caloric deficit if you want to burn fat, be in a caloric surplus if you want to build muscle. Everyone knows this. If you were to ask anyone on the side of the street, how do you lose weight? Eat less calories. That's not rocket science. Every little solution can be simplified into a very simple answer. The problem is we as human beings want to make things very complex when they're very simple answers. We think that just because there's a bunch of funny looking candles on this chart, that this one has a big wick, and I read in a book somewhere this one's a doji candle, and this one's here, and I have to remember all these different candles, and I have to remember blah blah blah. And you think that just because there can be money involved and there's these funny looking candles on the charts, and you can draw all these cool little things. Oh, this is a structure shift right here, and blah blah blah. Because you see people do that, you think it has to be complex. You think the problem of your profitability is complex when it's very simple. It's inside of your mind. It's not you allowing your edge to play out. It's you backtesting something, but then you not allowing that data to play out. How many of you here, show of hands, I want max participation. I want everyone to answer this in the chat. How many of you, and if you're watching the replay, just answer it in your head. How many of you backtested a strategy, got super excited because you've seen the data, and then you go forward test it and fall to pieces? You go and actually try to execute a trade after backtesting it for hours, and you're like, what the heck's going on? My backtesting data is telling me I have a 70% win rate, and I'm averaging a 2R, and I keep losing. Exactly. Michelle, been there. Unicode says, this is my problem. I'm profitable, but I overtrade. Shiitake says, yes, overfitting. Gideon says, I'm a newbie, so I haven't done it. Like, that's good. Then you got to experience it. Everyone experiences it. But either way, Anya, myself, either way, everyone experiences it when they go down the journey of trading. The problem is it's your mind. The problem is because now that money's on the line, now that you put your neck out there a little bit, you're a little worried, you're shaken up. You can't let that data play out. That's why if you go back to episode 1 and you really listen to that, day 1, I go over that ruthlessly. Data will cure so many bad problems in trading. So many. Because it gives you that confidence. So this brings me to the first point that I want to go over. Let me get to it here. So, simply put, if statistics show that 70 to 80% in any given study, go look this up. There's tons of studies on day traders. There's tons of statistics on people pulling brokers and broker data. And this broker, there's this many profitable traders versus this one. There's tons of that out there. If any given study shows that most are not profitable, instead of blindly being a two-dimensional thinker and assuming that this is because trading itself is the hard part, let's dig deeper into why this statistic is true. Why is 70 to 80% of the world unprofitable? Because, like I said, clicking this button isn't hard. Looking at a chart and finding support and resistance, that's not hard. Finding a profitable strategy, guys, there's hundreds of models online. There's hundreds that are profitable. I'm telling you, I'm not selling you some course telling you, hey, my way is the only way of trading. I'm telling you right now, as a content creator, I am doing myself a disservice by telling you, go watch other people's strategies if mine does not vibe with your psychology. Because just like how there's other vehicles out there, it's not like everyone's just driving the same truck. There's hundreds of cars and trucks and SUVs and motorcycles. That's because there's hundreds of different personalities in this world. And not everyone wants to drive a truck. Not everyone wants to drive a car. But guess what? That vehicle is still going to get you from point A to point B, right? So there's no best vehicle, just like there's no best strategy. They all are profitable. Now, there's some that are absolutely garbage. Yes, absolutely. But you can still, with the right risk management and the right lens of view in the market and having it vibe with your psychology, there's a lot of profitable strategies out there. There's a ton. So what is causing so many people to fail? Because we can all agree that the attention span of the people is at an all-time low. We can all agree, as every day goes by, obesity climbs. We can all agree that the most New Year's resolutions fail in the first weeks of the new year. We go back to the same point. It's that people are not disciplined and psychologically mature enough to treat this like a business, just like they would treat anything else that would go through their life of building a business and putting the time in. Because ask yourself this, exactly, driven by fear and greed. Ask yourself this, watching the replay and here live with me. If you can't stick in being disciplined in anything in life for longer than a week, I don't care if it's a workout plan, a meal plan, you want to take the stairs every day instead of the elevator, you want to do something. If you can't stick to anything for just a week, do you think that you can be profitable to stick to a trading strategy when it takes losses? Because there is not a single model out there that is a 100% win rate strategy. None. They're all going to take losses, guys. Losses are a part of the game. Losses are not losses in all actuality. They're just expenses on you to be able to then take another trade, right? Every loss that you take, it's just a part of the data that you've built. Losses, you're not going to be correct. We as human beings have been raised to believe for our entire childhood that you have to be right all the time. If you're not right, you're going to die, you're going to fail, you're going to do this and that. Our caveman brain associates failure with dying. Because back when we were cavemen, if we were wrong, we would either starve or get killed by an animal. Or get killed by another caveman. I don't know. Like, we associate so many of our basic feelings and moods and all this stuff to just basic ancestral DNA. Think about it. When you move, when you work out, you feel better, right? Because we associate that with surviving. When you're sitting and you're in a dark room and you're just like not doing anything and you're depressed, we associate that with dying. We associate that with not actually going out and thriving. We need sunlight. We need vitamin D. We need all that stuff. It's the same thing here on the charts. When we're wrong about a trade, we're sitting here thinking we always have to be right. If you go into a trade expecting to be right, you're already in the wrong foot, right? Because you're expecting to win. The only thing that you should ever be expecting is to follow your trading plan. That's why I absolutely hate when people say, yeah, my goal is just to make 1% a day, just 0.5% a day. Dude, my goal is just $500 a week. That's all of it's bullcrap. All of it. Because you can't predict the market. You can't predict what your returns are going to be. This is not a salary job. If you were running a business, would you just be able to predict magically how much revenue you're going to make next month, next week? No. But if you were doing a 9-to-5 job, you could predict how much money you're going to make next week, right? But these are two different things. You can't associate 9-to-5 thinking or salary thinking with a business mindset. You can't do it. You can't blend the two together. Because just like how you know when you're going to clock in and out on the 9-to-5, if you treat that the same way you treat your trading, you're going to be sadly mistaken. Oh, but I put in my 8 hours on the chart. Why am I not getting better? Because you're not taking it serious. But I'm journaling. Are you actually, or are you cookie cutting it? I'm doing my stuff. I'm going through the motions, but are you actually? Everyone knows if they're actually putting in the work that they need. Because guess what? 3 hours of concentrated, hyper-focused work is going to outbeat 8 hours of mindless 9-to-5 working every single day of the week. Everyone can agree on that. Business versus hobby, ladies and gentlemen. This is what it takes to be successful and profitable in trading. I'm telling you from my own experience, from multiple case studies in the Pack Trade group that I have here in the Discord. You have to treat this like a business. If anything comes into your mind as you wanting to sit here and treat this like a hobby, if you want to join Discord groups and talk to your other friends about 20 bazillion other strategies and ways of thinking, I'm telling you, you're treating it like a hobby. If you're following Twitter feeds of, I'm a perma bear and I'm a perma bull and all this blah, 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 you're taking up mental capital. If you're on social media arguing about why you're right and someone's wrong, you're taking up mental capital. This is not ESPN. This is not sports where we talk about whose team is better. This is a business. This is your key to being successful in life. This is your key to taking an income and actually plugging it into other investments and to create financial freedom for yourself. This is a skill that you can build for the rest of your life. That you don't have to have a single person tell you when you can go on vacation. That's why I speak with so much passion, and I'm so serious about this. Whether anyone wants to say this is cringy or cliche, I don't care, because I've seen the positive benefits that what trading can provide, and I live it every single day. And I see a ton of people in my Pack Trade group benefiting this from not just on the charts, but in their everyday lives, becoming better people. Because trading and what you learn on how to become a disciplined and professional trader, it applies to your outside world. You only become a better entrepreneur when you become a better disciplined trader. You only become a better person, a better friend, a better lover, a better partner when you understand that it takes discipline to stick to something. You become a better person because you're held accountable for yourself. Trading, you're accountable for every single action, good or bad, that you do. In the real world, you can slack off in a 9-to-5 and still get paid. You can slack off and get your salary. You can go through the motions and get your money, right? But in trading, everything is on you. Oh, but what if the market gives me bad price action? You chose to engage in the markets. Oh, but what if the Jerome Powell spoke? You chose to trade around Jerome Powell. You are your own worst enemy or your best asset. And the way to distinguish if you are your worst enemy or your best asset, are you treating this like a business or are you treating this like a hobby? Because psychology is what it's all going to boil down to. I'm gonna go through a little bit of statistics, and a lot of you are probably going to relate to this because I did all of this myself. Why do I know all of you are going to relate to this? Because I've done it. I've done it. A lot of people that I'm looking at in this chat right now has admitted to doing it, so do not feel bad. Most are in every single signal group imaginable. Most are in Discord calls trying to copy trade people. Most have 10 bazillion indicators on their chart trying to tell them when to go long and when to go short, crippling their ability to be confident in any single trade because there's 5 different indicators saying to go long and then 5 indicators saying to go short, and you have absolutely no idea how to read the charts. Most backtest the strategy, get excited about it, but then execute the trades in the live markets and can't handle the losses, and they hop to another strategy. Most can't stick through a 10-minute lecture on price action without going and flipping on TikTok or flipping onto another video because it doesn't stimulate their dopamine. Most people are doing every single thing I just said. And I'm sure a lot of you in here relate to the same thing that all those little things, I'm sure you all relate to them. Heck, right now, in this workshop, we're already 20 minutes in. Again, just like I said yesterday, I guarantee you 70 to 80% of the viewership when I upload this onto YouTube, they won't even make it this far. The people that hopped in here that seen this and got motivated last week, half of them probably have already fallen off. I said this even in the announcement channel in my Discord when I was going to do this entire workshop. Most people will not take this serious. I'm asking you to prove me wrong on what you want to do in life. Do you want this hard enough? Treating trading like a business means you find sexy in the unsexy in one very simple sentence. One very simple sentence. You are finding sexy in the unsexy. You're finding sexy in backtesting. You're finding sexy in looking at price even and not taking a trade and watching how price reacts to certain areas and certain data points because you watched all the different videos that I've posted on how to use data on the midnight retracements. You find sexy in all of this stuff that it takes just to make one single trade. While the majority of people fail at trading because they're just in all the stuff that I just listed, while the majority find pleasure in this is like, I'm going to make a little compare and contrast list because a lot of people love visually seeing this. So if I were to ask you, if you guys that are that's watching my screen right now, what category would this be in? So I want answers in the chat. I want you guys to read this. Fantasizing about profits, focused on winning trades. Tell me in the chat, profitable or unprofitable trader. Just let's say profitable or unprofitable in the trading circle voice chat. Focusing on winning trades. Focus on high win rates with 0 other metrics of a model. Focus on trying 10 different strategies at once. Focus on feeling trades with 0 data. Focus on the next trade. They're just focusing on the next trade. I need to win. I need to win the next trade. Focusing on backtesting a month of trades, and think that's all they need. Michelle says unprofitable. Chitaki, unprofitable. Sebastian, unprofitable. Norman, unprofitable. Matzi, unprofitable. Everyone knows this. I don't know each and every one of you that are saying unprofitable in the chat. I don't know how much experience you have. I don't know if you're profitable or unprofitable, but everyone knows this. You could ask somebody, you could rephrase this into just everyday life, focusing on winning at everything, focusing on always winning and never failing, focusing on 10 different ways to do something instead of just one thing, focusing on emotions instead of logical decisions. Like, you can ask anyone this and everyone will agree. This is unprofitable. This is treating it like a hobby. This is wanting dopamine. And then in the same breath, the majority that are profitable, the minority of the world, they focus on collecting years of data for one specific way of entering a trade. They focus on investing into their craft versus always taking the free route. They focus on multiple metrics of data and laugh when people ask them, what is your win rate? What's your strike rate, dude? What's your win rate? Where's your stop loss? They focus on journaling, not just their performance, but their psychology. So when you're in a trade, when you're on the markets, when you're sitting here feeling like you want to have FOMO, instead of giving into your emotion, feeling trades, they say, oh, that's what's causing me to overtrade. I'm not going to give into it. I'm going to mark down on my chart so at the end of my session I can go and see all of the markings that I've made, and I'm going to document this. felt FOMO. All right, boom. I'm going to put that there because I always complain that I don't have time to journal. I always complain that, journaling's boring and I don't have time for it. So what I'm going to do is I'm going to put down on this chart as I'm sitting here staring at the screen every single time overtraded here. Every single time I make a bad habit, every single time I go through the markets and I try to do something that doesn't follow my plan or breaks my psychology, I'm going to mark it down here on the chart so I don't have to remember it. And then at the end of the session, I'm going to go back and look at all of my markings and I'm going to make documentations of all of these. I felt FOMO. Okay, why did I feel FOMO? I'm going to document it. I felt like I wanted to overtrade. Okay, boom, I'm going to document it. They focus on reading price even when they are not executing trades to get super intimate with the asset that they're trading. They're sitting there watching price, screen reading price. Oh, but I don't have time. I'm at a job. Okay, boom. Backtest it. Use this little replay function. Read price. Instead of finding excuses to counter my argument or counter my points, find solutions to what I'm saying. Focus on being obsessed with risk management over everything else. Instead of focusing on a win rate, instead of focusing on being right every single time, instead of focusing on how can I always get a trade in, they focus on risk management. They're obsessed with risk management. They're obsessed with literally just how can I use my risk the most conservative way possible and be consistent over the next 100 trades, 200 trades, 300 trades, the quarter, 2 quarters, half a year, the whole year. How can I use risk management in a way that it's going to take care of all the losses that I am going to eventually take? Because I am not trading a 100% win rate and I'm never going to be right 100% of the time. But how can I use that? They obsess over that. They obsess over the mathematics over how to become a profitable trader. They focus on quarterly performance instead of focusing on the next trade. Oh, dude, I won that I won that trade. Okay, are you going to buy a Lamborghini off that one trade? It's the same thing. I tell my students this all the time in the Discord. I see a bunch of pack traders in here right now. A-Dub, Alpha, Chitaki, Dark, who else? Motzi, OJ, No Chains, Sebastian, Snipey, Wes. See a bunch of pack traders in here. And they'll all tell you the same thing. If you treat this and focus on quarterly performance, and every single time we get into a win, what do I say? Yeah, celebrate. Have a good time. But guess what? If you take a winning trade, do not let that consume your day. Do not let that consume you, because everyone in here is probably guilty to it, right? Oh, I took a winning trade. Let's go. Yeah. And then you go and overtrade, or you start fantasizing about buying a Lamborghini. The same thing is true for when you take a losing trade, when you're red. You shouldn't let that losing trade consume you. Oh, dude, I'm a failure. I got to switch strategies, blah, 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 right? You shouldn't let either or. But unprofitable traders, they find the extreme of the two. Instead of just, this is their emotions. Instead, when they're taking wins and losses, they're like this, right? When they're winning, they're at their peak. When they're losing, they're at the worst point ever in their life. Everyone here can relate to that. Successful, profitable traders, consistently profitable traders, there's like this. There's going with the waves. Took a loss, dang, whatever, Next day, this gets me closer to some more statistical wins. Took some wins, nice. Maybe I should de-risk a little bit because I'm on a win streak. That's it. They're focusing on the risk management, not, oh my God, I'm a failure. Oh my God, dude, I'm on the top of the world. I can read price like the back of my hand. Instead of being extreme on every side, they're just with the flow because they're focused on their quarterly performance, their monthly performance. How can they do in a month's time? Not what's the next trade and how can I win it? So all in all, the minority are focusing on what? They're focusing on long-term vision. If you could cut everything up into just one single thing, it's long-term vision. Versus short-term vision. Everyone fantasizing and focusing on all the wrong stuff. It all feeds their short-term dopamine hits. So ask yourself, every single time you're about to engage in price, is this a 90% decision or a 10% decision? Is this an emotional one or is this a logical one? And I'm telling you right now, it is bulletproof for you to be able to identify, is this a business or a hobby? So if the minority that are profitable focus on data, what are some important data points that you should know? Right? Because there's hundreds of them. There's hundreds of data points out there, because one of the things that I told you I'm going to go over is how to collect the data the right way, because we always talk about data. You hear me say it all the time. Data, data, data. You need data to do this. You need data to do that. Well, instead of giving you philosophy, I'm going to give you execution. So here's the data points that I personally think. Now, this is just my opinion. Again, guys, I'm not giving you financial advice. I'm not giving you specific trading advice. I'm not licensed to do so in any way, shape, or form, but you need to pay attention. This is what I focus on. I'm not saying this is what to focus on. This is what I focus on. And for me, in my opinion, I view my trading model just like I'm going into the Shark Tank, right? Everyone's probably heard of the TV show Shark Tank. If you haven't, a bunch of multimillionaires sitting in a room and people go in there and pitch their ideas, their business models, and then they may get some investing from the sharks. So that way they can, get capital to reinvest it back into their business, whatever. So if I go into the Shark Tank and they're saying, and the market is the sharks, and the Shark Tank is the chart, and I pitch to the market my idea, my business model, are they going to laugh at me, or are they going to say, you know what, this guy deserves a little bit of money? That's all trading is. You're pitching your idea to the market, and the market's going to tell you whether you deserve consistent profits because you know what the heck you're talking about, and the market's going to invest into your bank account, or the market's going to take money from you because you don't know what you're talking about. So in my opinion, if you don't know each and every one of these data points right here, you are not treating this like a business. But Austin, I don't know. You're not, in my opinion, you are not treating this like a business. The best performance compared to a bullish week versus bearish week, right? How does your strategy perform and uphold in a bearish week versus a bullish week? And is there performance differences that you can use in your favor? If it's a bullish week and you perform better, right, versus a bearish week, then maybe you could, as the week goes on and we're turning bullish, maybe you could add to your risk management. Or maybe if it's a bearish week, maybe you take away from your risk management. The best days of the week versus the worst days of the week. Are you better on Monday, Tuesday, Wednesday, Thursday, Friday? Are you worse on a Monday, Tuesday, Wednesday, Thursday, Friday? Your average winning/losing trade duration. My winning trades, I have an average winning trade duration of 48 minutes. My losing trade, I have an average duration of 1 hour and 6 minutes. Average points moves in my favor in any winning trade. You guys see me post about this every single day on Twitter. 25 points MNQ. I know that my model can provide me a very consistent 25 points a day. Every single day. I know that I can consistently pick out at least 25 points most of the time. I'm not 100% win rate. I do take losses, but most of the time I know my model can yield that. My profit factor. What is your average win every single time you win? What are you winning versus every loss? So if you have a 2 profit factor for every $1 you lose, you're making $2, right? So you're objectively mathematically profitable. So what's that profit factor in your business model? Risk of ruin. What is like the worst possible scenario for your strategy? Are you like going on if you backtest this for a year, 2 years, whatever, what was the worst case scenario out of that 2 years? What was the lowest point, the max drawdown, but in addition to that drawdown, what was the losing streak? What was the average losses per trade? Your risk of ruin. Best exit percentage. So when you get out of that trade, on how much or what's the percentage that trade still keeps on going in your favor, right? So if I go long, I don't know why that's disgustingly orange, but if I go long, right? And I take, okay, boom, profit right there. And then it keeps on going my way until it goes to where my stop loss would be. What's that max exit percentage here? So from my entry to there, right, 1.63%. That was the best, most max potential that trade could have ever gotten before it went to my stop loss. Why does that help you? A lot of people are like, oh man, I keep closing trades too early. Oh, I don't know when the best time it. Well, newsflash, guys, you're never going to take profit at the top. You're never going to take profit at the bottom. You're never going to short until the absolute bottom. You're never going to long the absolute top, okay? We're sitting here taking probabilities. But the best exit percentage can tell you, on average, over 100, 200, 300 trades, how much are you leaving on the table, and can you get a little bit more profit off the table, right? Like you now have data telling you objectively, not feeling, I feel like I keep seeing that trade run out. You don't have any feelings. Remember what I said in episode 1? Episode 1, data eliminates that feeling. Data eliminates the emotion. You have objective, definitive proof. But guess what? Not a lot of people are going to do this because it's boring, because it takes a little bit more work. It's not sexy measuring every single trade out over 100, 2, 3, 4, 500 trades and documenting that. Strike rate. Everyone knows strike rate, your win rate. Average lot / contract size is used if you're trading CFDs, right? What's your average lots that you use per trade? Trading futures, what's your average contracts? Your average drawdown, don't have to go into that. Everyone knows that. Max winning streak, self-explanatory. How many out of all the data, what's your max winning streaks and what's also your average winning streak? So if your max was like 14, but then your average is 6 to 8, now you know when to start de-risking because you're in a win streak and your data is telling you that you're statistically going to now come upon a loss. Or what's your max losing streak? If you know that you're going to lose 3 to 4 to 5 times in a row, right, then maybe you can start increasing the risk or whatever, right? You have the data to tell you. And then what's your average losing streak? So if once you take a loss, what's the odds of you experiencing multiple losses? And then if you use DCAs like I do, if you dollar cost average into the market, if you build into your position instead of using a single entry model, how many DCAs do you use? How many on average, on all of the trades, what's the average dollar cost average is used, and what's the average dollar cost average is used on winning trades versus losing trades? If you don't know these basic data points, now there's way more out there. Way more out there. But if you don't know this basic stuff right off the bat and you have executed a trade today, you have failed. I'm telling you guys this right now. If you consider yourself a profitable trader, if you consider yourself consistent, but you don't know your business, then how are you going to expect to treat this like a business? If you don't know how much money is in your cash register at the end of the day, how do you know if your business made money? AKA, why are you not journaling? Why are you not journaling both your performance and psychology? Why are you not treating this like a business, like any other business? If we can all agree that these are unsuccessful habits, then why are we perpetuating the unsuccessful habits and treating it like a hobby instead of taking the long-term visions that we need to understand and treating it like a business? Because it takes work. This is not easy. It takes consistency to do this, because psychology, the thing in between your mind, or in between your ears, your mind, that is what's going to run the edge. This is what it takes to build the edge to then run it. So again, the minority, they find sexy in this, right? They find this sexy. The majority, they laugh at it. They're like, oh, no, I don't need to know my risk of ruin. You're right. Maybe you don't. But would you rather have it and not need it, or need it and not have it? Would you rather have every possible aspect of your business so that way you know the information that you need versus the information that you don't? Or would you rather just treat this like a hobby and say, nah, I don't need it. I'm going to remember it. I'm going to remember it. No, you're not. No, you're not. So when you're backtesting, a few different tools, putting this into action, because everybody's like, well, how do you backtest? What's the best way to backtest? There is no best way, first of all. But a few different areas that you can go and look up on the internet, both free and paid. And remember what I said before. What's one of the attributes of successful traders? They focus on investing into their craft. They're not sitting here always focusing on the free. And I get it. People come from different backgrounds. People have different levels of money. But at some point, guys, I'm telling you, you have to invest in your craft. You have to invest in getting something that is going to help you become successful, right? If you want to be an Uber driver, you're not going to have a beat up old car that's going to break down on you. You need to have a semi-decent vehicle that's going to be reliable. If you work in a professional setting, you got to buy suits. You got to invest in how you look, right? Like every area requires in some way, shape, or fashion for you to invest in your craft. Here, you got to have some type of charting software. You got to have a good computer, or at least a laptop or something that is going to make it helpful for you. Or if you're trading on a cell phone, you got to have something that is going to make it easy. I know people that trade all 100% on their cell phone, but have something that's going to make it easy for you. Don't make it harder on you. So when it comes to backtesting software, yes, there's free options like TradingView, but if you want something that it's going to give you more data, and I'm not in any way, shape, or form sponsored or affiliated with these people, I have no link to give you. FX Replay, that's the premium option. A lot of people use FX Replay. Another one, now this I personally have and own and use, is Trader's Edge. Now, Trader's Edge, you use TradingView, but you document the wins and losses on Trader's Edge, and it's very good. You can backtest very quickly, still get a lot of good data, still get a lot of, like you see the equity curve and all that stuff. And it's a one-time payment. It's not reoccurring, so you can pay like a one-time fee, and then you have the tool for the rest of your life. So that's a pretty cool one. Google Sheets, I started out literally writing everything on a Google Sheet. All these little data points, I would put in a Google Sheet formula. Every single one of these you can make into a Google Sheet formula. And if you don't know how to make any of these into a formula, what did I say earlier? Become a three-dimensional thinker. Instead of asking every single question, how do I make a formula? Go and freaking chat GPT it. Google it. It's 2024. If you're asking someone some basic question of how to make a formula or how to do it, you got to be a three-dimensional thinker, guys. This is your business. It's chat GPT. When in doubt, chat GPT it out. It's free. Use the 3.5 version. It's free. I promise. They will make you any formula here. Exactly. Yeah, literally using Google Sheets myself. Yep, use a Google Drive with Notion. Dakota uses Notion. Notion's another great one. There's tons of them out there. Just use one of them. And then build the data, right? Pay for a little bit of the TradingView Essential plan or the Pro plan so you get more data, so you get more candlesticks, and then use replay mode. And then use Google Sheets or Notion or whatever. Now, one common mistake that I find when it comes to backtesting is people want to use their ego, right, instead of building the data. So what do I mean by that? By using your ego. So if we're just going into back replay mode right now, right? Like let's say right here at this exact moment, your model says to go short. Or no, let's say to go long, because we know the market's about to dump here. So let's say, boom, okay, you go long. And then you're like, okay, so I would place my stop loss here, and I would take a profit here, and then, okay, let's go down. Okay, actually, hold up. I don't think I would take that long. So I'm going to erase that one because, yeah, I don't know if I would take that one because, you know, the lunar cycle was a waning moon, and we broke above that candle, and yeah, I definitely wouldn't take that one. Don't be one of those people. I'm telling you, why am I saying that? And why do I say that other people are going to do that? Because I've done it. I have experienced everything, and I'm sure you guys have too. When you're backtesting it and your ego is wanting the data to look a little bit better than what it should be, backtest it how you literally would trade it in the live markets. And then put that data on there, because if you're sitting here backtesting on your ego, your data is going to be skewed. Your data is going to be false. And then that data is just going to run an unprofitable business. Would you want to do that? Absolutely not. So leave your ego at the door when it comes to backtesting. In addition to this, another common failure point is people put way too much focus on the performance of a backtest model instead of the objective reactions of price. Meaning, yes, we want to know the performance of a model. Yes, that is important, but that's not the main thing, right? Meaning, if I backtest something and it provided a 6% return in January, I'm not going to next year in 2025 expect a 6% return in January, right? Just like how every investment portfolio you see, right, and you put your own money into it, it'll show you the past returns, but what does that always say? They say past performance does not guarantee future results. It's the same thing in backtesting. I see people all the time talk about their backtesting performance, and they're like, yeah, dude, look at this. We made 10% in July, and July's coming up. I made 10% last year. It's going to be great. And then they have a red month. Objectively a red month, right? Like they stuck to the model and everything. It just was a red month. Guys, the backtest performance is only to give you a gauge on if the data and the model that you're using is objectively and mathematically profitable using the risk management that you've built into whatever you backtested. That's it. So all you're trying to see is this consistent and is there something here? You're not taking that performance and then projecting it onto the charts and expecting returns, right? I took a 5-win streak in February, so I better have a 5-win streak, and then you take 2 losses and you're just shattered, right? That data is to help your confidence, but it's not there to give you expectations. It's there to give you confidence in the model. And when you backtest, we want to see that, but really what we just want to see is the objective reactions. Are they happening? Even if it's a losing trade, is that objectively working? Right? If I say if I'm backtesting a model and you're looking at my chart right now, if I'm backtesting a model and I say right here is a short setup, right into this footprint, and I put my stop loss, I don't know, let's say here. Let's say it gets tagged out. Okay, you see how it got tagged out? But it still worked. Like, I still was short. Okay, now I take all of these losses that I have, even though there was an objective reaction here, and I take those losses and I learn from them. Okay, well, was this something that I could have controlled, or am I going to overfit that model because I would have actually put my stop loss here? Like, what can I learn from this loss? Okay, well, I put my stop loss here instead of maybe putting it here, and the data tells me that I can put it here because of this and this and this, and you go down the rabbit hole and you learn from the losses. The wins, ladies and gentlemen, this is the key to this entire workshop, entire episode. The key is winning trades is a side effect from how you treat losing trades. I'm going to say that again. I really hope that you guys are listening to this. Winning trades are just a side effect of how you treat losing trades. That's it. Because think about it. When you fail as a baby, flat on your face, 1,000 times, you eventually learned how to walk. So starting at the very beginning of being a human being, you learned from your mistakes. You learned from your failures. And over time, through conditioning that we've been brainwashed to believe in school, we've been brainwashed to tell us that we always have to be right. If we fail, it sucks. If we fail, it's scary. If we fail, it's wrong. Failure is amazing, and that's literally how we started learning how to be a human being at the very beginning of our life. So you need to go back to how you learned how to walk, to ride a bike, to talk, all this stuff. You failed. And you learn from those failures, and the success that you have now is from learning from those failures. You learned how to walk because you fell 100 times and you learned from it. Right? You learned how to do math because you failed 100 equations and now you know how to do algebra. Whatever the case may be. When you trade, everyone in here that's watching this live and it's what's watching the recording, everyone has failed at trading for years. Consistently, for months, for weeks. At some point, you have experienced consistent failure in trading. But if you sit here and whine and complain like a little baby because you want to treat this like a hobby, because you expect every trade to win, and you treat all of those losses like the market's against you, every time I go long, the market just goes short. Every time I go short, the market just pumps. It's the market. It's the market. It's the bad price action. If you keep that mindset, do you think you're going to learn? Or do you think you're going to consistently go into the same routine in the same circle that's causing you to become a failed trader? So how you treat your losses is going to be the side effect of if you're going to experience a winning trade or a losing trade. Because you learn from your failures. Your failures are expenses. Your expenses are great. They're not bad. You should welcome them. So when it comes back to backtesting, when it comes back to seeing how well it's performed and all that stuff, look at your losses. Look at were those valid losses, or can I learn from it? Is it objectively happening, whatever I'm testing to happen in the markets? And with the risk management, because that's a portion that no one focuses on either, with the right risk management, can I make this profitable, right? If I'm taking a trade and right here I statistically need to go short, with what risk management can I provide that makes this profitable? Because guess what, guys? Some of you are trading profitable strategies, but with the incorrect risk management. Do you guys believe that? Every single person in here, if you're struggling with a strategy of how to trade in these markets, I guarantee you with the proper risk management, you could probably turn that around or at least see why it's not being profitable. Because if you're trading like this, trying to get sniper entry, we all see that on social media, right? Caught this sniper entry, caught the top. No, you didn't. You went short 20 bazillion times and then you finally caught it. But you only showed that one. Sniper entry. But instead, if this is your short setup and you got stopped, but maybe you just need to increase the stop a little bit. Maybe you need a dollar cost average instead of single entry. Maybe your entry model, your risk management, once it gets tweaked, it can actually become profitable. That's what you learn and take from backtesting. And now, we have now became and went full circle into this workshop. All of this data that you build, all of this backtesting data, because why is Austin talking about backtesting in a psychology workshop? Because this data that you pour your heart, blood, soul, arguments with your significant other that you need to work hard instead of watch Netflix, all that stuff feeds your mind, feeds your psychology. Because if I know that I'm about to take a loss, if I'm like, oh, dang, I took a loss, instead of being a whiny little pouty person that I think the world needs to revolve around me, okay, well, I took a loss. Let me go look at the data. Well, I was on a 14 win streak, so I was due for a loss soon. And why did I say that? Because that literally just happened this past Friday. I was on a 14-day win streak. I was due for a loss. If I was sitting here on a 14-day win streak expecting to win and I take a loss on Friday, I'd be devastated, right? But if I have data, if I go down here, okay, well, what's my average winning streak? My average winning streak 6 to 8. Man, I'm doing good. This is performing really well. I'm probably going to experience a loss soon. Boom, have a loss. All right, sweet. That's what I was experiencing. The data told me I was going to do it. Or I take a winning trade. Oh, I took a winning trade. Nice. I take a long. Let's put the long back up here. I take a long position. I hit profit, and then the market Jerome Powell sneezes. He drops his pen and accidentally says NASDAQ to the moon, and price just absolutely just goes out of control. Dude, oh my God, why did I take profit here? I could have gotten a 6R trade. Oh my God. Or you have the data. Oh, nice, I took profit. The data tells me that this is consistent. The data does not tell me that this is consistently profitable. I'm glad I didn't shoot for a 5.18R because 8 times out of 10 I would have lost this trade, because 8 times out of 10 this trade would have gone to about a 3R and then reversed. Because I know that the data is telling me that this is not great. I should not focus on this. Yes, this was a very rare occurrence. But the data tells me consistently this is not going to happen. And I need to be okay with my nice base hit, because base hits turn into home runs, and home runs turn into paychecks, and paychecks turn into investment portfolios, and investment portfolios turn into financial freedom. And now I build a skill that I don't have to ask my boss for a 6% raise to just to match inflation, to ask for 2 weeks of vacation out of the year because I want to do actual more stuff. I don't have to do none of that because the data keeps my mind level and my mind level keeps me profitable. That is why I take this so serious. That is why I speak with so much conviction. That's why I'm real with you guys and I don't sugarcoat anything, because this can be one of the most game-changing things you ever dedicate your life to if you allow it to, if you take it serious, if we go back to the main point of business versus hobby. So that is the workshop today, guys. That's day 2 of the masterclass. That's episode 2. Do we have any questions in the chat before I end the recording and I end this workshop and let you guys go and enjoy time with your friends, family, or yourself? I don't care what you do. Anya says, have been treating it as a hobby, but ever since I came across you, my mindset has changed and treating it like a business. Dude, that's what you got to do, man. I'm telling you. You're going to find so much consistency and so much regularity with your model and your trading performance once you say enough is enough. I tell my Discord this all the time. There's a wise old man on the corner of the street, okay? In trading, there's this wise old man, and he said, if you press that button, you're going to get slapped in the face. There's going to be a hand coming down from the sky and slapping you in the face. What's the majority of the people do? Nah, I'm going to press the button and dodge it. Nah, I'm going to press the button really quickly and then I'm going to run away. Or no, maybe if I press it 5 times, it won't come down. What every single person presses that button, gets the crap slapped out of them. And then there's 2 types of people in the trading world. They're done being slapped in the face, and they're not going to press that button, and they're not going to try to outsmart that old man, or they're going to keep pressing that button, and they're going to get bruised, and their face is going to get puffy to just look like an absolute balloon until they're like, you know what? I'm probably not going to outsmart the market. I'm probably not going to I'm probably going to get slapped in the face if I'm probably going to get burned by the market if I keep revenge trading. I'm probably not supplementing my strategy by balancing 5 different strategies. I'm probably not going to do this well by speeding up the process. I'm actually making it way longer for myself. I need to treat this like a business. So the goal from this entire thing, if I could get all of that across from you guys, is I want you guys to ask yourselves at the end of this workshop, either recorded or live, just ask yourself, are you done being slapped in the face? Because Alex Hormozi said this on a if you guys don't know who Alex Hormozi is, just go Google him. Very successful entrepreneur. Super jacked. There was a podcast host. He was overweight, and Alex Hormozi's obviously jacked, and he kept asking him, dude, how do I lose this weight? I've tried all this, blah, blah, blah. And they go in circles for like 5 minutes until Alex literally keeps on giving him suggestions, and he keeps on shooting him down until he literally says, maybe you're not fat enough. I listened to that podcast, and I was in the gym, and it literally paused me in my tracks. I literally stopped, and I was like, dude, that is one of the most powerful things I've ever heard. Maybe you're just not fat enough, because in today's world, we as stupid human beings, some of us have to have health scares before we start changing our healthy habits. Some of us have to get wrecked on these charts and lose hundreds of thousands of dollars or fail hundreds of prop firm challenges or whatever the case may be. Some of us have to literally be at the depths of despair before we're like, you know what, Austin, what he's saying, it doesn't sound that cringy now. It doesn't sound that cliche now. Maybe treating this like a business is the sexy way to go about things. Maybe psychology is more important than an edge. Even though it sounds unsexy, even though it doesn't get clicks, maybe he's onto something. That is what the goal that I want from this. I want you all to ask yourself. I see Nijay, Snipey says, I feel attacked. I am the sniper. Oh, yeah, Snipey McGee. Where do I find the kindergarten class? It's all Greek to me. We're going into more specific stuff on episode 3 and 4. Gideon, Gideon, You need to watch episode 1. Episode 1, I go over all the basics, man. Go watch the recording. Nijay, just call me out directly. Wish I had this when I first started trading. Great class, man. Hey, thank you, man. Thank you. Slave 90, appreciate that. Thanks, bud. I know you're not selling us stuff. Your speech cadence reminds me of my former Amway upline. I appreciate you. I've improved 1% every day since Hey, I appreciate that, dude. Yeah, I mean, those those MLMers, man, they can really talk. I speak from experience, guys. When I first started trading, I literally have made every mistake I'm telling you right now what not to do. I have added hundreds of indicators to my chart. I've done all this. I've been in tons of signal groups, tons of discords, all that stuff. Copy traded live stream YouTubers, all that. I've done all of it. I speak from experience. So when I speak from passion, and I've also come from the military, I was in the Army for right under 7 years. I was a leader. I was a staff sergeant when I got out. Like, I led soldiers, so I'm kind of like I naturally talk like this throughout the years too. But yeah, I'm not here to sell you anything. You can join the Pack Trade Group. The link is in the description of this and in the Discords, but you don't need it. You don't have to be in my Pack Trade Group or have my indicator to be successful. And that is what I want to get everyone to understand, is you don't need to be in my group. If you want to see what professional trading is like, if you want to surround yourself with like-minded people within the Pack Trade Group and better yourself, if you want to see me trade 4 days a week, and there's only 5 trading days in the week, that's what the Pack Trade Group's about. And you get all my indicators and every other future indicator that I make with your membership, but you don't need it. Got to bounce. Thanks for everything, Austin. Go listen to some crappy music. I love you, Alpha. I've been recording my profit exit percentage the last 3 years, and it really tells me if I have been freaked out too early. See, bro, Chitaki understands. The best exit percentage is one of the most outlooked, not looked upon, whatever fancy word you want to call it. It is very undervalued, and it's a very powerful metric.